So with that, guys, want to go ahead and share with you guys some insights for the PM session. It's very similar to what we do in the AM session, right? It's time and price, which just means liquidity and efficiency and what time of day is it, right? So it's still the same factors, but some subtle nuances that we use in the PM session that are slightly different than the AM, right? So right away, we always want to check our economic calendar. That's always the first order of business, right? When is the volatility injection that's scheduled into the market? When is that, right? We always want to be mindful of that. So 2 o'clock, we have the FOMC meeting minutes. Of course, what they say, what the document says, we don't care about any of that. We just understand that they're going to use that high impact news to manipulate price action and move it all around. So with that out of the way, let's get into the top-down analysis, what I'm looking at here for today. Beautiful. So if you guys recall, yesterday we were using this range here. We'll make that purple. We're staying in the upper half of it. I like to see that. To refine that range even further, I'm just going to use this balanced price range here instead of this entire inefficiency. But I do like to see how the market's staying in the upper half, right? That's confirming strength, confirming bullishness. So I still haven't abandoned the bullish bias, still looking for higher prices until proven otherwise. And the fact that we're remaining above this range here, even stronger for that. Looking at set, toggling on set, I want to have this little volume imbalance there. We'll make this one gray just so we can keep things organized. So the gray box there, that's going to be that daily volume imbalance that we're looking for. So working down into the hourly chart. Right now, we do have equal lows and equal highs. However, I'm favoring the buy side. Like I said, I'll have to see what we get with the news here in about 9 minutes. However, as of right now, I'm favoring the buy side liquidity because again, my weekly and my daily bias is bullish. So even though, yes, there's equal lows, as you can see here, I still favor the buy side. So in a buy program, the market is seeking buy stops or inefficiencies above market price. And I'm still sticking with that narrative going into today's PM session. So with that, let's drop the line on midnight opening price. Let's get that midnight opening price there. So far we've been below that today. We have these last two down close candles here, which is a bullish order block. We traded into it yesterday, once more here today, and then a nice displacement higher off that. So levels that have my interest for buy side liquidity is going to be this high here. This is a London session high. I'm going to take off the buy side. I just don't like a lot of text on the chart when I'm trading. For your back testing purposes or when you're reviewing, if you want to have text on it, nothing wrong with it. I know based off the color coordination of what I have, like I know that purple line is midnight. I know the green is buy side. I know red is sell side. So over time, once you have your system down, once you have what it is that you're looking for in price, and then you start doing it over time for weeks and months, it'll be very easy for you to keep track of what you're looking at. But again, the only way I was able to get to that point was consistently getting in the reps like I shared with you guys, right? Journaling, back testing, reviewing day to day, and just seeing these repeating signatures occur in the market. Other buy side liquidity pool here. This is an Asian session high. And then here we have the previous day's high back here. So this is an important liquidity pool. For your journaling, you want it to look like this, buy side liquidity, PDH, previous day's high, so that then when you're reviewing, you can start to study and understand the significance of these daily and weekly liquidity pools. But again, for the purpose of my trading, I like to keep it nice and clean. So we're trading into these 3 consecutive down close candles here. Like how the market's starting to show some support. What I will be looking at for the 2 o'clock hour candle will be bullishness. So I want to see this 2 o'clock candle expand higher into these buy side liquidity pools. If the market then does rotate to the downside, order flow communicates its bearish, then I'll pivot, obviously, when I get that information. But as of right now, I'm looking for higher prices. All right, so I'm watching this key low here because this low here took out sell side. I'll do a quick review of the morning. Clear bearish order flow here this morning. If you look from this high here, touch on something that I shared with you guys here yesterday. which was how to know if order flow is bullish or bearish, just looking at it in a simple way. So our high is being displaced above or rejected. We see this high here. We trade above it. It rejects and displaces through the low. We have this swing high here. Trades above it, rejects it, and then we displace through the lows. We have this swing high here. We trade above it, reject it, and now we're displacing down through the lows. Same thing here. Swing high here. We trade above it, reject it, displace down through the lows. When the market is in a sell program, straight out of the PowerPoint, it's going to not be able to make a lot of ground above highs. It's just going to reach above the highs, accumulate and absorb the liquidity, then aggressively displace down through the lows. So pretty straightforward read this morning, a lot of back and forth. So somewhat high resistance, not the easiest morning session based off a small opening range gap and a couple other factors, but nonetheless, the order flow is pretty straightforward. Market stopped here at the rejection block or the lowest body here. And then now we're seeing strength in the price action. So with that in mind here, this low is going to be a key low because this low here already cleared out these stops. So what I want to see is, can they defend this low? Can we stay above that low and then start to materialize higher prices here going into 2 o'clock? So we have this bullish breaker block here. I'm going to be watching that. And again, see if the market can find some measure of support there. Like I said, the market here, we dropped down, cleared out these equal lows, and then we strongly rejected and displaced here to the upside. So I want to see if this bullish breaker can lend support. I would not want to see us lose this balanced price range. I'm not going to have this level on my chart just to keep it clean, but I do not want to see us lose this balanced price range. If we lose this BPR to the downside, that shifts my analysis, and then I'll either have to look for lower prices or read into the market, get more information to then see what the next high probability draw is likely going to be. And then also the regular trading hours. I know it's something that's extremely important for the AM session trading, something we use every single day. However, it is also just as important in the PM session. Well, not as much in the PM session, but it is something I'm always mindful of. So we now see we've gotten back above it, using it as support here, dropping down. Look at the bodies there, perfectly stopping at the low of that opening range gap or that 930 opening price. Market finding support, displacing higher. So again, I want to see us at least stay above this opening range gap. If we lose the opening range gap to the downside, that changes things, and I'll have to pivot, be flexible with what the market is giving me. So that's what I'm looking for and why I'm looking for it. So generally, whenever I'm trading the PM session, I like to, because the news is at 2 o'clock, I start my trading at 2. Many times I will get to my desk at 1:30 when I'm trading the PM session. Just like we do in the morning session, if I'm trading after 9:30, I'm there about 30 minutes before just to have everything ready. So then when I'm doing this analysis for you guys, I already have all these levels on my other templates, so I'm ready to go and I can just share with you guys what I'm looking for. But you want to give yourself at least 15 minutes before the trading session. 15 minutes to cycle through your time frames, mark out your key levels, look at the market structure, look at the order flow within the top-down analysis, and you want about 15 to 20 minutes to do that, right? So that's why we started here at 1:45, and now we're ready to go here in about 2 minutes for the high-impact news driver. So let's work down into the 1 minute here. I'm going to take off that 5-minute breaker as well. Just know that it's there. This is the opening range gap. I will be taking that off as well. Keep it clean. Put a vertical line here on 2 o'clock. So 2 o'clock is the volatility injection, and that's what I'll be watching for here for today's session. Make sure everything's ready to go. I'm in Q. Let's get 20. Get everything ready on the other accounts I'll be working with today. One other thing I do want you guys to be mindful of, glad I remembered. New week opening gap. So I'm used to having this organized across several different templates, so I'm able just to pull that information as I look here in the top right corner. However, do be mindful of this new week opening gap here. I'm going to have it in this yellow color. What you'll notice this week so far, what have we been doing? Let's go up to a 5-minute chart. Gravitating around the new week opening gap. One thing you want in your notes, 20 seconds here before we get to 2 o'clock. If the market cannot leave meaningfully away from the new week opening gap, it's telling you we're in a consolidation profile. Hence why my man Tommy today was more cautious, more patient, more reluctant to want to pull the trigger on something, because our years of experience communicate to us that when the market consistently refers to the new week opening gap, that we're more likely to be in a consolidation profile. So if you know your models, you know where your models perform best. Obviously, you want to push in conditions where your model is more likely to perform. Many times when the market's referring to the new week opening gap and pulling back into the range, you'll start to observe that will likely many times create more difficult price action. Not impossible, right? But just more difficult price action where it'll run away, pull back into the range, run away, pull back into the range, run away, pull back into the range. And where are we at now? Back into the range with the new week opening gap. Very, very important. All right, 2 o'clock, FOMC minutes hitting the wires. Let's see what they're giving us here today to work with. I'm hoping it's not a snooze fester. Like just getting things organized on my S&P layout. So let's get up off these 1-minute charts. Let's go up to the hourly time frame, share with you guys what I want to see. So you got this new hourly candle opening here at 2 o'clock. I want to see what they do with it. If we're going to be bullish, then it goes without being said that I want to see this hourly candle expand higher. But more specifically, I'd like to see us stay in the upper half here of this wick and then get a nice distribution to the upside. If it's going to be a clean session, that's what I favor seeing. And then I'll give you guys the levels that we're looking for as a draw. All right, so we're gonna look to, oh wow, what a horrible fill. Was looking to get into that 15-second gap there. And just jumped up and filled me there at the high. I wanted to get in that 15-second gap. All good though. So the stop's gonna go below this candle here. Really tight risk on the day. And then we'll see if we can get a run into the buy side here. All right, so based off what I'm seeing here, like how he dropped down, cleared out these lows here. Trading above this swing high, shifting market structure. Stop loss is just going to be just below this fair value gap here. If we're going to remain bullish, the market shouldn't trade all the way down through this gap here. We also dropped down to the new week opening gap, used it as support, displacing higher, exactly what I want to see. So, like I said, model forms, put the risk on the table, let the market do its thing. Would have liked to have gotten a more favorable fill inside that 15-second gap here, but some reason the market vaulted higher and filled me up here, but it's all right. I can still work with that fill. Fair value gap candle, stop loss just below that. If we're bullish and we're going to rally from here, wouldn't want to see it overlap that entire range here. And then we also have this last down close candle here. Also, if you look at the previous days, first presented fair value gap, you also see we're in that range there as well. But just to keep this chart clean there, I'm not going to have all that on you. Also see the market retracing down, hitting the high of that new week opening gap there. So have to allow for that in my stop loss and this last down close candle. So for stop loss placement, usually putting three things between my entry and my stop. So using the fair value gap, and that's one. Order block, and then the high of that new week opening gap, number two. Really small ranges today, which is why I'm in the mini contract. So not even 20 handles of risk. So very, very tight risk for this transaction for me. Market dipping back down into that fair value gap, hitting the midpoint. Need to see responsiveness from there. We're going to be bullish. So this fair value gap here, not a big fan of how we overlap the entire range, right? Like I've shared in the past, that doesn't make me bearish. It doesn't change anything. It's just not as bullish that we're trading through that entire gap there. Short-term low, taken out. So I'm going to give the market a few more minutes here. One of the things that I do many times when I'm trading and the market's not giving me signatures I want to see, right? Like displacements running away from the entry and leaving gaps open, is I'll do what's called a time filter, right? So if we stay in this range for 5 to 10 minutes, it's communicating to me either I'm early or the market's just going to consolidate. And if that's the case, then I'll just go right here, hit the X button and close out wherever we're at, because I don't want to spend a lot of mental capital on a market that's going to consolidate and chop. And what you'll see is look how important that was yesterday, right? Yesterday was able to trail the stop, really tight risk, took me out at very little dollar amount, and I stopped there. Reason being is because if you look at the rest of that session, imagine if I would be there trading, pushing, right? The account, right? A little bit of drawdown. That's not even the big deal. The big deal would be me spending my time and my mental capital in that market condition. So the best thing I can do as a trader, if I can identify it's not going to be clean, it's not going to be sloppy, or it's like not going to be clean and it's going to be sloppy, the best thing I can do is identify that early on and not keep pushing, especially as you'll see in a day like yesterday. Very important. And the reason I know that all too well is because when I was first trading, I didn't know or have the experience that I have now. So I would just keep trading and pushing in those conditions and either go on tilt because you've spent all your mental capital or just blow the account pushing too much. So the best thing I've learned to do is identify conditions I want to be in and conditions I don't want to be in, take what the market's given me, live to fight another day, always more clean opportunities. Right, so we still have the bodies here respecting this fair value gap. We need to leave it here in a few minutes. If not, then like I said, just manually going to close out because the market's not giving me what I want to see. If you're wondering about the stop placement, last down close candle, you see 50% of that is here. Stop loss is just below 50% of this down close candle there. So you see this candle drop down, hits it. You see how it hits that 50%? That's mean threshold or 50% of a bullish order block. Stop loss placement has to go below that. Anything above that is a bit too tight. All right, so I like how we're starting to create some distance away from the fair value gap. Now I need to see some follow through on the upside. This high here, need to see speed through that. So you guys see that perfect delivery down to the midpoint and stop loss is just below that. Then you can see it's also working the high of that new week opening gap. So you guys will learn a lot more about that when we get into order block theory. But it's more about where the order block forms that makes it a high probability bullish order block. Like I said, I'll cover all those details when we get to those lessons. But you guys can see it being used in action. All right, so now this high, I like the strong close above it. Risk is going to be reduced here because what is this low now? Intermediate term low, right? This low here took out the sell stops. So now, but what happens, those of you guys that have been taking notes, what happens before every significant price run? Run on stops, baby. That's right. All right, so hold on, I'm managing another account as well here, having to see where I'm getting the trader paid at. So the highs that we used on the 15-minute chart here, that's a good level to pay the trader. And then see if we can get it to this high here. Since I only have one contract, I may just look to get it here at this best case high here. So yeah, we'll look to do that. On other accounts I have though, I am getting the trader paid above this high here. There's a midnight opening price. That could be a level you pay the trader. That's 20 handles. All right, boom, order filled. 50% of the position just came off for me right here. So on this account, I only have one contract, so I'm just having to manage that one contract. So again, guys, make sure you're managing the trade based off your skill level and where you're at as a trader, right? You don't have to copy me. If that's the biggest trade you've ever been in, I would suggest paying yourself. So like we are saying, wanted to see speed through that high off the bullish order block and the high of that new week opening gap. And trim risk here a bit more. But I'm looking for a run into this high here. Sorry, guys, before I have to cough, I try to mute myself. I know it's loud on your guys' end. So like I said, 50% of the trade is scaled off here. There's another count I'm trading where I have 20 micros or just two minis. And one of the minis come off here. So from where I got in, it's about a 30 handle run. So fairly decent for a PM session. And then looking for continuation into these highs here. Like to see this gap here be a breakaway gap. Dropping down into that midnight opening price. I want to see more accumulation take place here for the next run higher. It can trade down to the breaker here. So I have to allow it to at least get down to that breaker and fair value gap. So like I said, I want to see that accumulation take place here at the midnight opening price and inside that fair value gap like we're seeing here. Don't want to see it spend time in the fair value gap. Want to spend maybe one, maybe two candles, continue blasting off. All right, S&P already did clear out its highs. So S&P cleared out its relatively equal highs. Oh, damn, I need to zoom way out. All right, so S&P is really running. So looking for NASDAQ to catch up to it here. So S&P cleared out this high here. What we discussed in the weekly outlook, is targets I gave you guys. Swing high here, smoked. And now we have these layered highs throughout here. So want to see further continuation on that daily candlestick. And if you see the wick here, we dropped down, we did what accumulated in the upper half. That's exactly what you want to see if you're bullish and looking for a bullish daily candlestick, and then seeing the same here for NASDAQ. So I want to see NASDAQ continue expanding higher. So since NASDAQ has not reached that high, I'm not looking at it as S&P, I'm looking at it as six sister. So I want to see NASDAQ catch up with the ES. Want to see them reach up for that limit order, snap up into those highs. All right, worst case scenario, we're making money. This wick here, want to see us stay in the upper half of that. Would not want to see us trade all the way down through that wick there. So as long as we stay in the upper half, that's extremely bullish to run up into those limit orders. So when I only have one contract, guys, I'm not able to take partials and I want the full pull. So I'm just going to manage the trade with the stop loss, not taking partials because I only have one. And why I'm only trading one contract? Why not two or three? Just because I had a very small loss yesterday. So I want to make it back, right? And this guarantees that I make it back and I'm up a few $100 on the week just on this account, right? You guys know I have several accounts. Like I teach you guys with the skill set, you can create multiple sets of income streams with the market. That's essentially what it is I'm doing. So this is not the only account I'm trading and I'm working with. All right, so nicely staying in the upper half. Right? Stop loss just below this fair value gap here. It can trade down into it like you're seeing here, but I don't want to see this entire range overlap. So it should trade down into it, displace higher from here. Further supporting this, right? For those of you guys that are locked in on the weekly outlook, taking this serious, doing your homework, what have we been looking for on dollar? Lower. So why am I looking for higher indices, right? Because the risk on risk off relationship. And then when I get into intermarket analysis and mentorship, you guys see how all that comes together. But you guys see me already using it in action, but you guys will understand the technicalities and the details behind it in the structured teachings. So dollar selling off nicely, pouring gasoline on the rally for index futures. All right, guys, that stops me out there. Get all these limit orders off. So at about $1,500 a day. So I'll take it. That's gonna conclude my day, guys. So I'm gonna get back to the party here, do a short review, take any questions you guys have, and keep my day moving forward. Hope it was insightful. Told you guys we'd put on a bit of a clinic here on the PM session for you guys, and there you go. So let's take it from the top, guys. Why am I looking for higher prices? Let's take all this off here. Do a short review, and you'll see how the pre-market analysis flows right into my trading when it's game time. What time is game time? Economic calendar every single day. Get there about 15 minutes before. Get things ready for 2 o'clock or the session you're trading. Daily bias is what? Is bullish. Told you guys we're not abandoning that. So I'm staying in line with the weekly, and the daily institutional order flow. Hourly time order. Let me make sure everything's closed out. Shit, sorry, I'm trying to focus on two different things here. Make sure it closed out, man. I made the mistake a couple of days ago with leaving a limit order in on accident. Not pretty. All right, so hourly chart. What was the bias for this? So if you're a scalper and intraday trader, you can trade a hourly candle like a daily candle. So what was the bias here for the daily candle, or really the hourly candle? It was bullish, right? And what I said I wanted to see us do, accumulate in the upper half of this wick. Open, drop down, couldn't even reach lower quadrant. Or sorry, upper quadrant. What's that telling you? Market is bullish. Opens, drops, trade higher. So open, low, high, close, and then we're trading the distribution. What was the low? Remember I told you guys, why was that a key low? Because it ran stops. Every significant price run happens after a run on stops. Open low of the candle, and I'm looking to get positioned. Let me see if I can pull this up here. Executions. So yeah, I got that shitty feel that so what, 47s, but yeah. So what I'm doing is I'm trying to get positioned as close as I can down to this opening price, right? For the expansion higher. And then I'm trying to ride this distribution. What was the draw? This swing high here and this swing high back here on the hourly chart. Told you guys there's equal lows, but I'm not worried about it. Why? Because the daily chart, weekly chart is bullish, right? So even though there's equal lows on the hourly chart, you have to understand top-down analysis. And I'll get to that in month 2, towards the end, once I've taught you guys institutional order flow and market efficiency paradigm. But the higher time frame is parent than the lower time frames. So yes, there may be 1 minute equal lows, but the daily, the weekly order flow is much, 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 much more important in your analysis than a lower time frame liquidity pool. Does that make sense? So that's why these equal lows weren't important. I'm sure you guys were wondering, where's equal lows there? Why was that not a factor? Because on the weekly and the daily chart, we are bullish. So you see how that's going to trump anything you see in the lower time frame. So distribution here at 2 o'clock on the upside. So that's like the daily bias or the higher time frame bias for intraday trading and scalping. 15-minute chart here. I told you guys this was the key low. Why? Because this low took out sell stops. So for those of you guys that are taking notes, you guys already know this is an intermediate term low. We don't want to see that violated. This candle here drops down into the new week opening gap, but more specifically, that balanced price range. Remember the balanced price range I took your attention to? I said the market needs to stay above that. Let's make that black here. And then the market drops down into it, shows displacement, and we're going long right in here. Aiming for the buy side here, and then this high here, which I still think they're going to get there. I just think they did a deep retracement, right? So dropping down into that 5-minute gap there and breaker here. So we have a breaker and a gap. So they're likely going to run it higher, but that's good for me. I'm paid. And like I said, it's my dad's birthday. So I'm going to go ahead and get back to enjoying the rest of my day. That's why we trade for freedom. $1,500 is better than a day job, right? So the market drops down into that gap, snapping higher. So I still suspect they're going to keep reaching higher, but I'm paid, got what I'm looking for. So I'm not going to be risking anything else. And one thing I do want to take your attention to as well is you see how one winning trade easily fixes a small stop loss like yesterday. So you guys see how I show you how to stay calm under pressure, how to not fold under pressure. Because what happens when you go on tilt? When you go on tilt, you're folding under pressure, right? The market put a little too much pressure on you, and now you're losing control of yourself. So I'm showing you guys by example how to stay in control of yourself, how to stay cool under pressure, leave it alone, come back the next day, make it back like nothing happened. Easy. Balanced price range, drop down into that, get distribution higher. So as long as you remain above that, market's bullish. Gap theory, which you guys will be getting into in month 3, use that with the new week opening gap, market trade down into it. But what do we want to see if the market's bullish with gap theory? The market should stay above it, right? And then you see how we dropped down, couldn't even hit midpoint. That's really bullish, right? And then you see we got that explosive price run into the upside. How'd I get the liquidity pools? Very straightforward. 15-minute chart, 15-minute swing high here, 15-minute swing high here. It's that simple, right? So you want to study every single day. That's why I took your attention to that in the first week, because every single day that's going to give you price runs to study. And pretty soon you're going to see how this turns into trade setups every single day. I promise you. Every single day the market's running to 15-minute highs and lows. So all you need to do is know which one is likely to go to. And now guess what? You have an ATM machine every single trading day, right? So that's what we're doing here, looking for higher prices on the 15-minute chart. And then we just transpose it down into the lower time frames. So jumping down into the 1-minute chart, like I said, I got a bit of an unfavorable fill here, but was able to manage it. Stop loss went below mean threshold of the order block. Why is that an order block? I told you guys I'd come back to that. Well, because this down close candle trades into liquidity. So when I teach you guys the PD array matrix, you'll see this is a turtle soup, a run on stops, run on these old lows. After that, you'll immediately see a bullish order block. So the turtle soup is the run on stops is going to be the first sequence in a reversal. The next one is going to be the bullish order block or the change in the state of delivery. And that's going to be this opening price here. Entry here, stop loss below that. Well, then after the order block, you get the fair value gap and the breaker, and it'll always form in that sequence. But like I said, you guys will learn that going into month 2. You see the bodies here respecting in the fair value gap, stop loss just below here. Sorry to give you guys the time filter because you see the market spent 8 minutes. Anything over 10 minutes, this is something you can write down as well. If you take an entry and the market does not run in 8 to 12 minutes, you're probably either early or the market's just consolidating. So what I would do if the market would have just stayed in this range, like I said, I would have hit the X button, closed out, think nothing of it, keep my day moving forward, and come back in a day where there's going to be cleaner opportunities. But the market ended up giving me feedback here about 8 minutes into the trade. Displacement, want to see speed through this high. Why is that? Because if they're going to run for these stops here and here, they're going to want to do that quickly. Because if smart money is buying down here, they're going to need to distribute to these buy stops here and these buy stops here. And I think eventually they're going to want to get into these buy stops here. So they're going to want to send it up there quickly so that those orders are still there when they're looking to sell, when they're looking to cover their position. And then you can see the fair value gap bodies respecting that beautifully, sending the market higher. So there is today's market review. So doing everything 2 in 1. So guys are supposed to get a market review today, but that'll be here at the end of this live stream.